Well, hey there, everyone. Welcome to my weekly show on StockCharts TV. My name is Dave Keller. I'm the founder of Market Misbehavior and the president and chief strategist of Sierra Alpha Research, and I'm so thankful you're tuning into my weekly show on StockCharts TV. Love to take some time every week to, identify opportunities, talk about how to manage risk, and understand the investing landscape using the power of the StockCharts platform. Today, we're going to talk about generating ideas. We're going to talk about one of the scans that I use literally at least once a week to identify breakout stocks, right? I'm often asked, how do you identify like the things just starting to emerge, things that are, have the potential to really show stronger gains going forward. For me, it often comes back to a couple scans that I just run consistently, and this is one of my favorites. Now, there are a couple different general approaches to scanning for new ideas. You can go complicated. You can go very specific, looking for a very specific combination of factors, or you go really broad. And I tend to favor that approach. My goal with running a scan is to come up with a workable list of stocks that I can then start to analyze individually and start to identify some specific opportunities, across an opportunity set. So with that in mind, let's go right to the StockCharts platform. And by the way, if you're looking for my market recap show, you can find that on my Market Misbehavior YouTube channel. We also live stream on all the major social media platforms. So follow me on all the socials, Facebook, Instagram, LinkedIn, X, and you won't miss the next episode. All right. Looking at the StockCharts platform, you may notice, by the way, that the top part, what we call the menu bar, has changed a little bit. They actually made some adjustments to this menu bar just in the last week. So it might look a little different if you're like me, you've been using the platform for more than a couple years. It might be a bit jarring, but I have now, gone through them, and I'll tell you, it's a better organization than what has been on the platform before. The reason why I'm spending some time showing you this is because scans and alerts, I think very appropriately, have their own kind of section of the website now. And these are arguably two of the most powerful tools you have available to you as a StockCharts premium member. And I would encourage you to look at the subscriptions. They are ridiculously underpriced for the value you can get from them in terms of your ability to manage your portfolio, identify opportunities, really identify entry and exit points, and manage risk in your holdings. Having said that, so some of the tools, and certainly a lot of the tools we're going to talk about here as a paid subscriber to StockCharts, you'll have the ability to manage more scans and do a lot of more custom scans and alerts as well, which I think are really powerful tools. So what we're going to do is actually go down this section called the Advanced Scan Workbench. And I've done that ahead of time just to show you this scan that I run literally every week. I often get asked, how do you find the next big thing that's starting to work? I literally just scan for new 3-month highs all the time. And I'll go one by one. If you're not familiar with the StockCharts engine, this will just give you an idea of what we're doing for. Number one, we're just looking for stocks. Number two, we're limiting it to the two major U.S. exchanges. Number three, we're eliminating ETFs because for this purposes, I'm just looking for kind of mid-cap, large-cap U.S. listed names. However, keep in mind you could customize this further if you want. I'm keeping a pretty broad universe to start. So I'm saying anything above a 5 billion market cap. But again, you can customize that according to your, to your particular investment goals. Here, this line is actually to limit it to just members of the S&P 500. I actually have a kind of a template that I use for all of my scans. And this is one of those basic things I put in there because I often find I want to just look at like the S&P 500 members, or I want to look at a broader list. I may want to look at a particular market cap range. So I kind of have that as a placeholder, and then I can add or change the values if I want. If there are these little, what do you call this? Little slashes, right? These mean ignore this line. That's why you can see it's kind of grayed out. If you delete it, you can see it now. It looks regular like the rest of it. If I put the little 2 slashes just below the question mark on the keyboard, it grays it out. So right now I'm saying anything. I'm not limiting it to the S&P, but I could if I just remove those 2 slashes. But this is really the most important line. This says the most recent weekly close is greater than last week's 13 weekly closes, right? So the highest weekly close for the last 13 weeks, I want to make sure that this current weekly close is above all of those last 13 weekly closes. Now, if you want to do, intra-week highs, you can say weekly high versus, last week's max 13 comma high. It'll do the same thing just using intraday or intra-week highs. I just use the closing prices just as a starting point, and then I kind of go from there. So that's it. So literally, this is a scan that I run all the time. I have versions of the scan that I have automated called scheduled scans, which you can see here, which allow the StockCharts platform to just run these scans in the background without you even knowing it. It'll send you an email with all the results, however often you want it to run. That can be a great productivity enhancer, giving StockCharts some things to run behind the scenes and then just let you know when anything pops up on the scan. So I ran the scan just a little bit ago, had 192 stocks. And again, that's a much bigger list than I would probably want to start with. So I might refine the scan a little bit further. But just to show you, this is what the results kind of look like. Now, when I run scans on the StockCharts platform, what you have to remember, it's an iterative process, right? So if it's 192, responses, maybe we go back here and we change it, right? So if we say, all right, let me just look at the S&P 500, then we run the scan. Right now, it's down to 74 stocks, a little more manageable. Maybe I want to limit it by some other criteria. I can start to add it there. What I often do from there, though, is sort it by industry and then by sector. And that's just a trick that I've learned, because what I like to do is sort it first by sector, and then within each sector, sort it by industry. And if you do it that way, click on industry first, and then sector, it's going to sort first by sector. So we can see comm services, consumer discretionary, consumer staples, energy, alphabetically through the 11 S&P sectors. And then within each sector, similar stocks are grouped together. So the 4 home builders on the scan are all grouped together. And so that, otherwise you kind of have different stocks in random orders. I like grouping them in a meaningful way. So that's kind of how I, usually do it. Hit save to chart list, then you can start to review the results. Now, having run this scan many weeks for many years, I will tell you I've sort of found there's 3 general types of charts that come back when you scan for stocks making a new 13-week high, or a new 3-month high, basically 65-day high, however you want to refer to it. The first example would be Liberty Media, LLYVK, which is the ticker that we're looking at. These are the C shares of Liberty Media. This is an entertainment stock. This is what we call a big base breakout. Because when you scan for stocks making new 3-month highs, what that means is you're going to find charts like this that probably had a peak earlier this year, maybe months ago. Then they've sort of settled into some sort of consolidation phase, right? And so they're not appearing back on this new 3-month high screen until we finally start to break out, right? And that's when it starts popping higher. So back here in the last couple weeks, we're finally starting to register on the scan because it's getting above there. So when I see this type of chart, I immediately want to start drawing some lines to recognize the fact that we are breaking out a significant base. So I usually take that major high and draw a horizontal line to just see where that breakout has really been. This is the type of chart that often can lead to much further gains, right? Look back here. You had kind of a similar pattern. It would have appeared on the scan back here as well. When we finally make a new 3-month high, it probably would have triggered actually back here because it's higher than the last 3 months. I would have looked at that peak from March of 2024 and said, all right, a breakout above that level probably suggests much further gains. So look at how we broke above like 44. Then we continued way higher, almost doubling over the next 6 months before we eventually made that peak in February of this year. So, one thing I've learned, don't be afraid to buy the new highs list. Stocks breaking out above resistance, stocks breaking out on stronger volume, stronger momentum. Look how high the RSI got during that breakout. Those are often really good momentum names that have much more significant upside potential. So finding these kind of charts early on when they're just starting to break out, that's one of the things I love about this scan. So one group of stocks you'll find are charts like Liberty Media, really more, what we call big base breakouts. Stocks that have been consolidating for a little while and just starting to break out. The general way I tend to play a chart like this, and I'm kind of generalizing, is I see the breakout as sort of your entry point, right? That's the indication that, okay, we're now going higher than we've been for the last 3 months. We're now emerging from this basing pattern. That suggests much further upside. So I'm going to assume the primary uptrend is up. Then I'm going to use good money management skills to limit my downside in case the price starts to break higher, or starts to break lower. So in this case, I actually use that breakout level as a stop as well, right? So when we break out, you'll often get a brief pullback to the breakout level. So in this case, $82 is right about that peak from February. That lines up pretty well with the resistance from kind of late June, mid-July. And then in the last week or so, we've finally broken above that level. So good long candidate for me, in my opinion. But then we any pullback, as long as it remains above that breakout level, still a good breakout, still with upside potential. We break below that $82 level, I probably avoid it. So what I like to do with this kind of chart actually is a different thing. Instead of that trend line, there's another trend line. There's another trend line called, I think it's called auto support and resistance. Yeah, here we go. So if you just click the level, see it, the color automatically is red if the price is below the line. It automatically turns green if it's above it. So if you have a group of charts like this that are just breaking out, use this auto support resistance tool on stock charts. Just look at the chart. Go through the charts one by one and make sure the line is red, or excuse me, make sure the most recent line is green, because that means the price is above that line. And if you would see the price break below that trend line, it's going to turn red, telling you, okay, it's no longer in a good uptrend phase. So that is one type of chart that I like, and that comes up often in the screen, what I'd call a big base breakout. This is something one of my Fidelity predecessors, Bill Doan, who ran the technical research department in the 70s, used to, he made a career out of identifying big base breakouts in the 80s and 90s, and then further on in the 2000s, and served him quite well. So I think of Bill when I find those kind of breakout candidates. So charts like Liberty, big base breakout, that's the first type you're going to identify. Now the second type of chart, a little different. These are stocks that are breaking to a new 3-month high, but I would argue still not completely breaking out. Like Liberty Media now making a new 52-week high. It's not just a new 3-month high, really starting to emerge after a consolidation. Motorola was actually in a downtrend, right? We hit a peak in November of last year, then had a significant pullback into the April low. From there, we really haven't recovered a ton. We've been more sideways, right? And if you look at the last couple months, you can see that Motorola has been range bound between like 400, 405 on the lower end, maybe 425, 430 on the upper end. And now it's just popping up on my screen because we're making a new 3-month high, right? We're getting above the highs for the last 3 months on a closing basis. But when I bring up the chart, I find that this is a stock that even though it's making a new 3-month high, it's still below resistance. In this case, we can see the 200-day moving average is right around 440. We can see that the swing high from late April and even early April is right around that same price point. So the chart is telling me 440, 442 is a really crucial level. So in this case, I probably wouldn't consider the new 3-month high to be much of a trigger. This tells me put it on a watch list, set an alert for when we break above 442. That would mean we're clearing the 200-day moving average, clearing resistance from earlier this year. Then and only then would I consider it to be a good upside opportunity. Easiest way to do that from this page, by the way, on stock charts, below the chart, you see this little orange button. That's how you get to the alert engine. You say cross above 442, and I say MSI breakout. Woohoo. All right. Then I like to select email, text message, and site notification. That means it's going to pop up with a banner at the top of the website. If it triggers, it's going to send you a text message to your mobile device. It's going to send you an email. That way I know I'm going to receive that alert, and I hit save alert. So, with some charts, right, when you run the scan, sometimes I feel like they're actionable charts. We're like, all right, this is the name I want to take a shot at today. Let me think about managing my risk with some sort of stop order. Other charts like MSI, when I look at the chart, it gives me more of a not quite ready vibe, but I have a clear level at which point I think similar to Liberty, it's a valid breakout. So this is one I probably wouldn't take a shot at today, but I would use a price alert to just remind me, okay, this was a compelling chart. If it gets above this level, it's now above that level. Then I want to dig into it further and see if it's worth a shot in my portfolio. Alaska ALK, which coincidentally is the biggest flight carrier here in the at SeaTac in the Seattle area. So it's an airline I fly often. This is another one where it's like kind of not quite ready, right? It's not quite breaking out. It is technically making a new 3-month closing high, but it's still below resistance, right? We can see just today, we traded above the 200-day moving average, but closed back above it. So it feels not quite ready. We also closed below that July swing high, also the May swing high, just above 55. Feels like 55 is kind of that trigger, maybe 56 to get above the 200-day. So maybe I set an alert there as well. I'm going to split the difference and say, break above 55.50, ALK, taking off, pun intended, select all these guys, hit save alert. So it's funny, with this exercise, sometimes I get charts that I don't think are ready, but at least I have a game plan, right? I have a setup in mind. I think, all right, if we can break above this level, then I want to reevaluate it, determine if it's one I want to take a shot at. So I think MSI Motorola and ALK Alaska kind of fit into that second bucket of potential breakouts, but not quite confirmed yet. Now, of course, when you're looking for stocks making new 3-month highs, you also get stocks that are in established uptrends. And you could try to filter these out and say, show me stocks that are making a new 3-month high but haven't been that good in the last couple months, to try to filter out things like Caterpillar that already feel kind of overextended. I don't mind seeing them, though, in the scan results, because I like to think about and always remember the charts that are just consistent gainers, right? The ones that have just had this incredible run. Think like an NVIDIA just going up and to the right. Every time I run the scan, I want to be reminded of those winning names that continue to do great things and follow through on an uptrend. So the third type of name we tend to find on the scan are kind of the established uptrends like Caterpillar. These are charts that probably feel a little further on. They probably feel a little too late. These are the kind of charts I'd probably love to find back here. And coincidentally, Caterpillar did pop up on my new 3-month high scan back here when it broke above the 200-day moving average. That's more of an actionable entry point in my work. Now it feels a little more extended. So with this type of chart, I more accept the fact that it's going higher. I know it's broken out and it's continued up. So now I'm just thinking about what would tell me the trend is no longer in place. So in here, I'm thinking more money management, more trailing stop, and saying, all right, I'm going to assume that I've already seen Caterpillar pop up on my screen before. Let's hope I already have a position, or at least I'm aware of the name breaking out. So let me focus on things that would tell me this uptrend is no longer in good shape. For me, the 21-day exponential moving average is one of my favorite kind of short-term measures of trend reversal. In an uptrend phase, as long as the price remains above an upward sloping 21-day EMA, the uptrend is in great shape. And anything above there, I would argue, is just noise, nothing more than that. If, however, we break below the 21-day exponential moving average, that's what tells me things might start to be changing. You can see just on the left half of the chart a number of times where an established uptrend was doing well, and then we finally broke the 21-day EMA, and it told me at least there was some sort of change, what we call a change of character on the chart. Whatever was working to propel the stock to further gains, no longer working, and so now I need to start to more manage the downside potential risk. So for Caterpillar, this is an example of a chart that's already been in an established trend. These are the kind of charts I like to save on a list and just follow those key levels. Either identify a particular price level, like a level of support, that if we broke that, that would tell me that the trend is reversed. Or I often just use the 21-day EMA and just track this uptrend as long as it remains above an upward sloping moving average. When that would stop happening, that tells me things are more likely reversing. So that is the scan that I run literally at least once a week. I always am kind of running this in the background. I have a version of this scan that's scheduled to run all the time. And again, going back to the main scan, the whole point of this is just to look for new 3-month highs. I keep my scans super straightforward, super simple, because I want a working list of charts that I can then go through in a little more detail. So anything less than sort of in the 50, 100 chart range is kind of good for me. And then I like going through a bunch of those charts one by one and just looking for key signals, key patterns, key breakouts that feel actionable, that feel like, okay, this came up on the scan and today's the day when I might want to take a shot on it. Having run the scan for a number of years, I would tell you there are 3 general types of stocks you will find in these. Number one, like Caterpillar, these long extended uptrends. These are charts hopefully you've already been aware of, but at least it gives you an idea of where the leadership is, which stocks are really starting to work. Look for breakdowns in these charts, because that will tell you that maybe there's a rotation going on. Arguably, we're starting to see that here at the end of July of 2025, by the way. Second type of chart would be breakouts that are just starting to come out, what we call a big base breakout. These are sideways consolidating charts that are just starting to emerge. I love how the scan can help me identify those before they've already had incredible gains. This is earlier on when I think there could be much further upside potential. This is where I think about an entry point very, very soon and think about that breakout level as a way to manage potential pullbacks. Finally, you have charts that are starting to break out but still have overhead resistance. I would call these still much to prove kind of charts. Motorola, MSI, Alaska Airlines, ALK, I think fit that criteria, or certainly that type of chart. When I run the scan this week here, last week in July, I think both of these give you a clear indication. There's a level on each of those charts which I think would really acknowledge or at least confirm that a new uptrend phase has begun. This is where I leverage the alerts platform on StockCharts. You run the scan, you see the charts, you hit the alert bell, and then just remember, the platform will remember for you to keep an eye on that level and send you a message when the breakout has finally occurred. What scans do you use to look for breakouts? Which scans do you use to generate ideas on the StockCharts platform? Wherever you're looking at charts these days, drop a comment below and let me know what your scan criteria are. I'd love to see it. Maybe we'll do a future special focusing on that particular scan as well. That'll do it for today. By the way, if you're looking for my market recap show called Chart This with Dave Keller, that's on my YouTube channel called Market Misbehavior. You can check it out there. Also, follow me on all the socials, LinkedIn, X, Facebook, Instagram, and of course on YouTube, where we will keep you updated with any new broadcasts or videos to share with you from my Market Misbehavior channels. Also, the Market Misbehavior podcast has been heating up recently. Some really cool interviews. Last week, I sat down with Bob Pisani, who has a 30-year run on the floor of the New York Stock Exchange for CNBC. He had some awesome stories and anecdotes from, a career spent on the floor of the New York Stock Exchange, interviewing people, talking markets. He had some great insights on investing, some great words of wisdom and observations from, really navigating the NYSE floor for so many years. You can check that out on my YouTube channel as well, and I hope you enjoy those recent interviews. I'm Dave Keller with Market Misbehavior. Have a wonderful week, and remember, it's always a good time to own good charts.